This video is going to discuss our new Hurst center of gravity bands. And basically what these bands are a polynomial regression channel. And just like regular Keltners, Bollinger Bands, linear regression bands, you basically want to sell the upper bands and you want to buy the lower bands. Every few seconds this repaints and redraws it on all the past bars. So it basically looks perfect going in the past. Here's a 5-hour range chart, and when you see the trend is up, you want to buy the lower bands. Trend is up, buy the lower bands. Trend is up, buy the lower bands. And it's always important that when you see currencies making higher highs, that's a sign of an uptrend. This is the first time where it does not make a higher high. So if you buy the lower bands, it does still go up about 10 or 12 pips. But at that point, the market's in a downtrend, you want to sell the upper bands. Now, there's two different versions of the software. Of this indicator in our software. One is the picture perfect bars, which does not show what it would have looked like in the past. If you want to see the actual past values, click on actual, and this will show you exactly what it looks like in the past. Let's add some more days on here. Okay, so this is what it actually would have looked like at the time. You have an uptrend, you want to buy the pullback to the lower band. And so you'll be looking for an entry here, and you can see that one worked. It worked really well. You get into a trade here, you probably lost. It goes down a little bit lower and comes back up. You get long here. You had a chance to make 5 or 10 pips. You had a chance also to make money here. Now, again, this is the first time where it didn't take out those highs. We're in a downtrend, so we're looking to sell the upper bands. And again, this is exactly what it would have looked like at that time in the past. So let me just briefly show what all these options do. This is a number of periods that you are referencing. M is basically a number between 3 and 9. It's the order of regressions it does. You probably want to keep it somewhere between 3 to 6. This is the standard deviation. The default is 1.618, which works excellent on longer time frame charts. Intraday time frame charts, range charts, tick charts, 0.618 I find is very effective. And then this is the width in pixels of each bar. If you don't want to see the center line, change it to 0. And you can see the white line in the middle is gone. If you don't want to see the square bands, put those to 0 and they will disappear and you'll be left with the outer bands. If you want to see the outermost band bigger, you change it to 3 and it makes it thicker because it's a much more important band. And then of course the colors. You can change the color of the center line, square, the bands high and low. Now, here is a trick that you can use to find the perfect settings for whatever time frame you want to trade. Let's say you like 30-minute time frame charts. Bring up a 30-minute chart. What you can do is something I like to call visual backtesting. As far as I know, I've never seen any other product have this. And you can select any of these fields you want to adjust and hit the up and down arrow. And it will show you what it would have looked like with different settings. Now I'm going to leave that 192. I'm going to put this back to 1.618 and then we can go from there to adjust it. If you want to hit the down arrow, you can see it moves it to 1.5. You can find a setting that perfectly fits the currency and time frame that you're trading on. And of course you can also play with the M period too. Take it down. The smaller the M number, the less curvy it is. Once you increase this number, it becomes more curvy with price. And the default is 5, which a lot of people like. And again, this works on all time frames. You can put it on a daily chart if you want, and it lets you see the longer time frame trend. You can see that the euro was trending up and it pulled back and hit the lower bands. This is a phenomenal place to be looking for buys, and you can see it went up 300 pips. This particular indicator is not just for trading, scalping, and short-term systems, although that's our focus with it. So I'm going to remove this and show you again how to add it to your chart. So if we get pullbacks to the lower bands, we want to be buying them. We have the Hurst center of gravity. And again, remember, if you don't check actual, it basically only gives you accurate values for the rightmost bar. All these bars in the past have been curve fitted to look perfect, just like a linear regression. If you click on the actual setting, then it's going to show you what it would have looked like in the past. Now, for a longer time frame trading, the default setting is good. For intraday time frames, short time frames, I like the 0.618. I find it works very well for my style. And so again, let's look at how you would use this. We're in an uptrend. You buy the lower band. You buy the lower band. It's so strong it broke through the upper band, so it makes sense that on the next pullback it may not get to the lower band. So if you want to buy it somewhere between the center line and the first gray band, it's usually a pretty high probability place. And again, we have a higher high than the previous high and the previous high, so this is a decent place to be buying. This is not much of a pullback. I like on range charts at least 2 to 3 bar pullback. That's 1 bar pullback, then you have 2 more. It closes outside the band. The trend is up. And you can see on the way back up, it didn't get back above the white band. That's the sign that the trend is kind of slowing. So if you want to kind of, when you see a little double top right here, go for a counter trend trade, kind of let things sort out. It broke back above the upper bands. I wouldn't be buying such a narrow pullback because in this area right here I would consider buying. It makes a higher high for the last hour, pulls back. This is a great place to get in. And you can see the accuracy of this. You know, very nice trade here, very nice trade here, nice trade here, nice trade here, huge trade here, nice little counter trend trade. I would skip this trade even though it worked. And then this trade here as well. Very high probability way of trading the markets. Now let's scroll forward into the future. Take a look. Notice up here at the highs, the price broke through the lower channel, came back up. It's up so much during the day you could consider it going short right here, but this is a much better one here, here, and here. And again, we're trading against the trend here, but this one worked, this one worked, this one worked, and this one you would have had a loss. So of the counter trend trades, 3 out of 4 of them worked, and pretty much all the trend ones worked. And if you use this in combination with our currency indexes, you're going to do very well. You can use it to time those as well. So I'll quickly showcase that in action here. We'll put it on a 5-minute chart, and we'll just show the euro by itself. And again, you might want to get rid of some of the bands on here. You can kind of estimate where there will be. A lot of times I don't use the square, and I don't care about where the center is. I only want to see the outer 2 most bands. You can make the outer one a little bit wider. And now, you know, it really lets you see areas of, you know, that you can buy and sell. And this is just one currency index of the euro index. So the market was in a trend up. This is a pretty steep pullback right here. Obviously, it made new lows for the day, so you're not going to get much of a bounce off of that band. The trend is actually down. But if you were short the breakout, this is a pretty decent place to get out if you trade. You go short again at the upper bands. And when it breaks through the upper band, that's a pretty big sign that the trend is up. You can use a range bar chart to possibly buy the euro dollar or euro yen at that time. And then you're looking to buy the next pullback. Obviously that trade here is a failure. What I typically do if I see a currency that's has just made new highs, you want to look to get into this trade, and they're not always going to work. You then buy the next breakout of the trend line, and that exploded up. And then this is what typically happens. Once you have a strong trend up, you buy the lower band. That worked. That's a pretty decent little pullback right here. So what I'm going to do now is showcase how that would look with 2 currency index charts. There is the euro dollar, and we'll put up the dollar index or a yen index. Okay, so I'm going to go ahead and add the Hurst center of gravity to this. Remember, I have the 0.618. That's a better setting in my opinion for intraday time frames, and I'm going to get rid of the center line and the square line and just showcase the outermost bands. Those are the only ones I pretty much take trades with myself. And then remember, I forgot to check the actual bar here. So you check that, and then it shows you what it would have looked like in the past at that time. So now that you have both of them up there, if you wanted to trade the euro-yen, you want to find the euro to be strong, for instance, and the yen to be weak, and you want the euro to be at its lower band while the yen is at the upper band, for instance. Okay, I've lined these back up, and let's, again, take a look at this right here. The euro is in an uptrend. This is a pretty decent place to buy. However, the yen is not reset at the upper band. It's near its lows. It may not have that much more to go because it's already been falling all day. You ideally want to find a situation where here the euro is pulled back. It's likely to resume an uptrend. The yen, although it's not at the upper band, at least it's pulled back off of the lows a little bit. This is a much better and much higher probability place to be getting in. A little bit after 8:30, we want to look for buys in the euro-yen. Here's 8:30, and guess what? Pretty much on a dime, it goes from that level, 138.33, all the way up to 78. Huge move, and very well predicted using the currency indexes, along with you can use a 2-minute chart, 3-minute chart, 5-minute chart, tick chart, or my favorite, a 5 pips per bar range chart. Again, let's try to find some more ideal places here. Here we have a pullback in the euro to the lower bands, right? The yen did fall through the lower bands, which is a major sign of weakness. Ideally, you would find it at the upper bands when this one's at the lower bands. Then, it's likely to come down while this one's likely to go up, and you'll have an explosive move. But that doesn't happen that often. The market rarely gives you perfect trades, but it doesn't mean you can't find trades that are likely to give you 20 or 30 pips. At 9:30, we're looking for the euro-yen to go up, and guess what? At 9:30, we have the euro-yen exploding up, over 40 pips. So at 8:30, an hour before, it went up about 15 pips, and then an hour later, even more. But it's an amazing timing tool. Let's change the currency on the bottom here and try to find one that possibly lines up even better. This is a pretty decent timing of the dollar. Unfortunately, the euro is also strong. So I bet you at 8:30, with the yen being weak, you're going to have a nice dollar-yen buy at 8:30 or 9:30. And again, just as in before, 8:30, that was pretty much the end of the down move. It did go up 5 or 6 pips, and then shortly after that, it shot up over 30 pips. So that's another example of how to use this for timing one individual currency. If you find a high probability buy point and you just have another currency that's weak in general, you can use that for timing. Let's try some other currencies here. This is absolutely ideal. The euro is strong and it's at the lower band. The CAD is weak and it actually shot through the upper band. Now, oftentimes that's the sign of strength, and on the next pullback you want to buy it, but it is very likely to go down. So at 8:30, take a look at the euro CAD, and you're probably likely to get a nice buy. This is almost a perfectly lined up situation. 8:30, you can see it goes from 1.4365 all the way up to the whole number. 35 pip move in a very, very short amount of time. So that's how you use the Hurst center of gravity, and hopefully you learned also how to do visual backtesting, visual optimization using the indicator settings and the up and down arrow to adjust them automatically. In most software products, you'd have to type in the value, hit the submit button, see how it looks, go back, change the number, hit the submit button. You can actually see past settings of different values probably 50 times faster using a visual backtesting tool.